Wait and see rules the day, but what about the week? Many investors are away for their summer holidays this week, while markets are left with few catalysts amid a thin diary of data releases. They have to wait until Friday to hear Fed Chair Powell's remarks at the annual Jackson Hole Symposium. But can they afford to sit on the sidelines as the next phase of the war in Ukraine is determined? Chris Turner is Global Head of Markets for ING. So Chris, the dollar made tepid gains as President Trump pledged to set up a meeting between Russia and Ukraine. Are markets cautiously optimistic for peace?
I think they are. I think there's a mixed reaction if you look across the foreign exchange markets. So today, for example, the Polish zloty and the Hungarian forint, which have been at the forefront of the whole Ukraine story, they're kind of rallying. They're going to marginal new highs, which is quite optimistic. Yet the Swiss franc, which is normally a defensive currency, that's also doing well. So I think it's all marginal so far, and that probably reflects the news, which is, what does the security guarantee really mean? The US has promised coordination, but is that a full-fledged commitment? So I think the market is hesitant, and I think that's understandable.
It has failed to lift the euro, though. It's softened against most G10 currencies. Why is that?
To be honest, the moves are relatively small, so just sort of 0.1, 0.2%. So I think, as you mentioned, it's quite some markets. You've got to remember as well that the dollar actually still yields quite a lot, above 4% compared to 2% rates for the euro. So if nothing's going on, by rights, the dollar should do a little bit better because deposit rates are a little bit higher. But I think we shouldn't read too much into price action this week so far.
Let's switch gears now and talk about the pound. It's facing a key test tomorrow with the release of the UK inflation figures for July. What are you expecting?
Yes, we're thinking that we're going to see sticky inflation, both, I think, on the headline and the core level and the services level as well, which is going to feed into the recent narrative, which is that the Bank of England is more hawkish than people felt probably about 4 weeks ago. And, the market really is doubting whether and how quickly the Bank of England is going to deliver their next interest rate cut. I think we still at ING, we're still going for like a cut in November. The market doesn't price that at the moment. So sterling could become a bit weaker, but probably not this week. If inflation is sticky, it's going to support the hawkish Bank of England view and keep sterling relatively supported.
Meanwhile, could tomorrow's Fed minutes create some FX volatility, especially if you see more underlying dissent among the central bank?
Yeah, I think we know already that there were two dissenters, right? Christopher Waller and Michelle Bowman, who voted for the 25 basis point rate cut. Remember at the time, though, this was before we had that weak jobs data. So all of the narrative is going to be how the jobs market appeared solid. The Fed had time to wait. So I think because it was before the jobs, there might not be the bigger market impact that there was were this seen after the jobs data. But I think probably, as you mentioned, the greater focus will be on Jackson Hole this Friday.
Well, let's look at Powell's key speech now. Could he confirm a rate cut for September, and how would the dollar react?
Yeah, you would think that having pitched the Fed's patience on the idea of a solid labour market and then effectively the rug having been pulled from under him with those big back months revisions to a weaker labour market, that he is going to have to realise that does the US really need restrictive monetary policy given a softish labour market? So I think there's a good chance that he does signal that they're ready to move in September. He did that last August before easing last September. So I think if he does that, I think we could see another leg lower in the dollar. The market is already pricing just over two cuts from the Fed this year. We at ING think there'll be 3 Fed rate cuts. So I think if he does acknowledge the Fed is ready to move in September, the dollar should weaken.
That was Chris Turner from ING. Don't forget, you can watch more videos on Reuters.com.